All right, so look at the data that came out today. Looking like the Stag and the Flation is coming. And that really isn't a surprise, at least to me, because it's one of those things where it's like, yeah, kind of makes sense. Fed never really got inflation under control, never got any deflation, and now with all the jobs revisions and cuts and layoffs and firings that we've been seeing, it's like, yeah, it's like, here we go. The economy is stagnating. I mean, shit, I wonder what it's actually at now in terms of unemployment. Government numbers today said 4.6%, when in reality, it's, I think the functional unemployment, last time I did that one, was up towards 25%. So I wonder what it is now. Really do. Wouldn't be surprised if something like, I don't know, close to half the actual like working population of our country is either underemployed or unemployed at this stage. And again, the numbers really bear it out. And again, some of the actions of the Federal Reserve, I mean, that's also kind of telling. I mean, why did they suspend the $500 billion a day limit on repurchases in that facility? And it's one of those things where it's like, okay, now we're starting to see what they see. And that is, there's not necessarily, well, there probably will be a liquidity event of some kind that they're going to try and front run and fix by pumping God knows how many trillions of dollars into the markets and the economy. But also, it's one of those things like same tools, same kind of broken record approach to everything, even though it really doesn't work in the past. So, yeah, I mean, when you look into it, I mean, now let's just look at what data we got today. So it's one of those things where it's just like, yeah, unemployment, 4.6%. So again, how many times in history have we gotten up to like 4.6% where it's like, good things happen? Like, let's think about that. It's like, probably not very many, especially if you look at the trend. Like non-farm payrolls, okay, that's interesting, 64,000. Okay, let's pre-revision. Like, remember, they like to revise our numbers down over the next couple of months. Let's see what that actually turns into. And if we go by Powell's words himself, I mean, what did he state? He thinks that jobs are generally overstated on a monthly basis by about 60,000. So right there, it's like you're down to 4,000 at that point. So yeah, retail sales month over month, 0%. Like, no, that's probably not a good thing either. And again, then it looks like, again, average hourly earnings month over month are starting to slip. It's like, okay, because again, those don't increase and we get more inflation. Cost of living is basically up. Your dollar goes not nearly as far. And yeah, you really are going to need to make that over $140,000 or whatever that number was in that study to not be considered in poverty. I mean, that's just nuts. I mean, if you go back into the 70s and you look at what the minimum wage was and you adjusted it for today, it's like minimum wage would have to be like equivalent $56 to $58 if you do the math real quick, which is insane. So what's the federal minimum wage right now? Still $7.25, $7.50 an hour. So good luck with that. And again, another thing that kind of bears this all out is one thing that I found interesting was, again, let's see if we can go up here. Let's look at futures. And again, it's one of those things where oil, I mean, that's getting down there. $55 a barrel. I mean, again, constant trend, because that, I mean, to me, I mean, maybe it says something different to everyone else, but it isn't just the increased production in oil coming out of the market, but the lack of demand. I mean, like I said, stagnant economy, people are pinching pennies, not really spending as much, not traveling as much. They burn less oil, burn less gas. I mean, that's an energy input. Less is needed. So again, that looks like pure demand destruction to me, which is not a good sign. So again, it's one of those things where is 2026 going to be the year? Is it going to be the year where everything kind of starts to really come apart? And it's also one of those things where it's like, why gold and silver, again, precious metals up, and why they've been on the tear that they've been on. Because again, it's front running the expectation that the government and the Fed are going to print and ease and inflate and basically just bury the rest of us. I mean, all these signs are not looking all that good. Again, with the way the market, again, has been playing out the past couple of days, curious to see when that was going to bounce. Curious to see if it's going to bounce. Did it bounce a little bit? Yeah, a little bit. But for the most part, it was kind of sideways and ranging all day. Because I think people are finally starting to get the idea that things are not okay in the economy. And things will probably continue to not be okay going forward. So, I guess the big question is, where do we go from here? And I don't see that going anyplace good. So again, everyone that's kind of riding high on their horse in terms of their portfolios, investments, 401ks, retirement accounts, and all that stuff, it's like, yeah, it's like you might want to take some profits, take some off the table. Not financial advice, obviously. I'm a nobody. But I would not be surprised if things really got cooking and we got a decent sized correction to the point where it's like it might take some time to actually sort all this shit out. Maybe not. Again, maybe this time will be different. AI will come charging to the rescue and we'll live the dream life where we don't have to work anymore. Everything's free, basically. You know, all that, you know, utopian dream stuff that certain segments of the population like to think we're going to get. Even though the human condition does not so well when it has no pressure on it. But that's a whole nother conversation for a whole nother time. But yeah, again, it's just one of those things where given this economic data, it's like, I do not see how we avoid what is coming. And this has been coming for a long time. I mean, the boom part of the business cycle has been going on for way longer than it typically has in the past. And it's one of those things where it should be no surprise that we get a correction. And in fact, we should kind of all be wanting that correction, because if we don't get it, here's the thing. The longer you drag this out, the more violent and nasty that correction is going to be. So, considering this is the longest boom part of the cycle we've ever had, I would expect the bust cycle to be just as nasty, if not nastier. And again, it makes sense. The more you inflate something, the more it has to deflate some, and on the other side of that. So what does that look like for you? What does that look like for me? I mean, who knows? I mean, we're all different, and we all got different lives, live in different places, different cost of living, different jobs, different income, different circumstances. So it's one of those things where I imagine, again, we're all going to feel the pain with the scale of this one. I just don't know how that's avoidable unless you're very, very smart and strategic. I mean, again, this is all financial advice you've heard from probably all over YouTube and the internet and everything. Is like, get out of debt, minimize your spending, build an emergency fund and stuff like that. And it's like, that's all well and good, but I don't know, is that surely enough? I mean, if you have zero debt, good income, then all of a sudden your government, bank, central bank decides to inflate the currency to the point where your buying power drops by 50% in a matter of a couple of years. Is that you going to be able to bounce back from that? Because these two entities refuse to accept deflation. Because again, it's one of those things where that just can't happen to them. It's one of those evil, horrible things when that's exactly what is the cure that we need. But again, they will fight tooth and nail right up to the point where they implode to keep that from happening. But maybe this time is different. That good old saying. And not necessarily different in a good way. I mean, don't be wrong. It's like, yeah, we need the deflation. But deflation on its own is also going to cause a lot of pain. It's almost to the point where if you're going to go through it, you might as well go through it. Just rip that Band-Aid right off. Make it short and extremely painful. But just got to keep that duration way, way down. Because again, if it's one of those things where it's like, again, just like the Great Depression, government decided to step in and try and fix the situation there. And what did they do? They just dragged it out. It would have been over way faster. Economy would have rebounded way sooner, but no, they just had to keep trying to monkey with the system. It is a self-correcting mechanism. So let it correct, let it do its thing. And you know what? When all these people that made shit financial decisions, and I'm not talking necessarily about the little people, I'm talking about the big people, the banks, the companies, the misinvestment, malinvestment, the fraud, let them fail. Let them burn. You know, if the government really wants to, you know, earn some trust back from the people, like maybe throw someone in jail this time, more than one guy, like back in 2008, whenever that one dude got prosecuted and everyone else got paid a bonus on the taxpayer's dime. Yeah. So let's see how this one goes. But yeah, 2026, the rate we're going, looks like it's going to be an interesting year. Hey, maybe at some point we'll actually be able to afford to buy a house. A real house, not a tiny home, not that shit. A real house. But who knows? But yeah. See where we go from here. So I'll catch you guys on the next one. Thanks for watching.